Welcome back. I'm Lee, the Pit Village Trader, and I'm going to talk to you now about step 2 of the do nothing spread betting system. And step 2 is buy on strength, sell on weakness. That is to say, you've probably heard the story or the saying, buy low, sell high. That's exactly the kind of nonsense you get taught when you're at school, like something along the lines of the human race is only 6,000 years old. It's that kind of nonsense that gets taught to try and put you into a certain frame of mind that makes you act in certain ways. But the truth is, you can't. In my experience, you can't really buy low and sell high, especially when applied to the financial markets, unless you have some inside knowledge that a particular asset class is low and will go high at some point in the future. So and even if you could apply that kind of thinking, or if you thought you could apply that kind of thinking into a particular asset class or environment, say for instance climate change. Now, if climate change is going to affect the production of crops around the world, then it stands to reason that those effects on crop production would have a knock-on effect on the price of food, and therefore food prices would go up. You could frame your worldview based on your belief, and you could and probably are right in your belief that those things will happen. But what you can never do is you can never predict the time frame. You just can't. You've got no idea when this thing that you think is going to happen is actually going to happen. So when it comes to trading the financial markets, the only real evidence that I've ever found works for me, despite whether I have a worldview or a position that might be right or wrong, the only thing that seems to work for me is to be reactive and base all of my trading decisions on actual evidence of price action. So which means when a price is moving up, I'm a buyer. When a price is moving down, I'm a seller, because those moves are evidence. You can see them on the charts, and so that's why for me the real answer is not to try and find stocks and shares that you can buy low and sell high. It is to find shares that you can see are strong and buy more of those strong shares, and sell shares that you know are weak and sell more of those weak shares. For instance, as an example, just to kind of bring this into perspective, this is the Evraz position that we opened not so long ago, and I bought this share without looking at any news, without applying any technical analysis, without listening to any market analysts, without applying what I think is my worldview to this trade, or applying any kind of personal ideology to this trade. All I did was see that this price looked strong, and when I saw that, I wanted to buy this share. So how did I do that? Well, in this case, I identified this share in my ISA account. So as I've mentioned before, not every evening, but on an evening when I'm thinking about opening shares for the following day, I'll have a look at which shares moved in that market session. So in that day, I'll have a look which shares have moved, whether they've moved up or down, how much they've moved, what percentage they were. And then when I see something that's moved maybe 3, 4, 5% in a day, that to me is evidence that something is happening. So and when I say something, I mean that people are either greedy for that share or they are fearful for that share. So they're greedy when the share price is increased by 5%, and they're fearful when the share price is reduced by 5%. That's my initial assessment. So say this one on the Evraz position, the share price had moved up a few percent, 5%. So then that was listed on a market movers list as one of the shares that had moved for that day. So then I clicked on it, and then I was presented with this chart, which you can see here. Now, at the point where I got in, which is here, sorry, it's just flicked over. It's this little dot here. So this dot here, that was my first entry point on this stock. Now you can see the recent price action on this share at that entry point was quite weak. Fear was present, and the share price was actually at the highest price that it had been at for as long as this share had been listed. And then we had this huge sell-off. So the very recent price action for the last week or so had been fear. People were selling off, or in the grander scheme of things, people were afraid to lose the profits that they had recently gained, in my view, on this run-up. So that was how I initially kind of assessed it. But then how did I identify whether this truly was a strong share or a weak share without looking at any news? Well, I basically just looked at how the share had performed since, I just dragged out the chart basically, and you can see at least since 2017 that this share has been in a clear upward trend, which, and I don't want to use words like trend or upward trend or anything that might refer to my assessment as being related to any kind of technical analysis, because it's not. However, when the price since in this time has increased by 247.2%, so 247% in 2 years, this share price has increased. So it doesn't matter how you look at that, what fundamentals you're aware of, or what you know about that marketplace, that evidence that you can see has proven, to me at least, that much cleverer investors than me think that this is a share price that is worth being invested in, and that's all the evidence that I need. So I can look at this and assess that yes, this does seem like a strong share. It had been strong here. It then was very strong there. We then were at that very high point, the highest point that it had ever been at. We had that little fear, oh my gosh, we better cash in now because we've made so much money on this price, on this share, that we don't want to lose it. So we'll sell. And then I still felt that that was still within the main upward trend of this share, and I got in here. I sort of watched the position and soaked in the atmosphere of that position for a couple of weeks, and I opened a second position here when the share price started to turn in my favour. We then had another couple of days of balancing out, and then it started to turn in my favour again. So there'd been three attempts, if you include the first one, 3 attempts to experience an increase, or three changes in price that were evidence to me that people wanted to be back in this share. And then you can see on the chart that after the third entry point, so I opened first position, started to go my way, I opened the second position, it continued to go my way, I opened the third position. After the third position, the share price increased by 25%. Well, yeah, roughly 22%. So that's what I mean when I say buy on strength. It is evidence that you can physically see with your eyes very quickly. It takes no longer than a couple of minutes to look at a share and say, right, okay, so it was at this price, it's now at this price. People want to be in this share, therefore I'm going to be in this share. It is purely following the market sentiment, and it is very reactive. But I know that I'm not smarter than anything. I'm not smarter than the analysts or the institutions or the sovereign wealth funds or the professional investors or anyone who does this full time for any, to make an income. I'm just not that. I'm just a normal bloke. I don't know any of the stuff that they know. Therefore, if they all think that it's worth getting in, I'm just going to follow them in until I see that there's weakness, that I start to believe that there's weakness coming back into this share price. So and that's when you get to once you're in a position, you then have step 3 of the do nothing trading system, the do nothing spread betting trading system, which is about running those positions that win for as long as you can, and as the price moves up in your favor, bring that stop loss up. So the first milestone that you achieve is to break even, therefore guaranteeing that you don't lose any money on that position, so you protect your capital. And then the second milestone is to move, as the price continues to move in your favor, is to trail that stop loss up, to move that stop loss up, so that you start to lock in and guarantee profits, so that when the price does, if it does turn against you, that you do have guaranteed wins. So on this position, we've now moved our stop loss up to a point where we've guaranteed a profit of around £700, which I talked about in a video a couple of days ago when we moved those stop losses up. So this position now, to me, it's guaranteed a £700 profit, profit on this position, and I will continue to ride this position higher for as long as I can. And that's basically the idea for me of buying on strength. And selling on weakness is no different, really. So I'll just give a quick demonstration of that. John Wood Group, actually the best demonstration was the position that I opened in Key Group just last week, where we profited £2,000. So Key Group PLC, I'll just pop this one up. Yeah, so when I say buy on strength, we're looking at trends that are positive, and that the price action is evidence of people smarter than me wanting to be in that share. On the contrasting side of that, or the flip side of that coin, when I look for weakness in a share, I look for a trend going down, which indicates to me by price action that people are trying to get out of this stock as quickly or as slowly or gradually. They're slowly trying to move out of this share, which indicates to me that there's weakness in the share. Therefore, I'm short in that position. I want to sell that position. So we did that. Again, same procedure. I looked at some recent market moves and to see which positions had decreased in value over the course or increased in value over the course of a day, market session, to prove that there was volume and something happening with this particular share. This position was highlighted. I opened it up and I could see clearly that since the 17th of October 2018, which is this figure down here, up here, this price had dropped by 84%. So, in 6 months, this share price had lost 84% of its value. So rather than trying to buy low, buy low as a big dip and then sell when it recovers, just sell the weakness, just follow what's actually happening in the market. React to things that are happening now, because you can see the things that are happening now or have recently happened, whereas you have no idea what's going to happen in the future. So it's very difficult to buy low and sell high unless you know for a fact that something is going to happen. So like you have some inside knowledge, or you're just a whiz and you're a genius, which I'm not. I'm it's just much easier and simpler, and it takes less work. I'm not reading any news, just a quick scan, evidence of weakness, sell the share. So that's what I did. I entered the position round about here, I think it was, and you will see over the space of the following 2 weeks, the share price dropped dramatically, and it continues to drop now, and there's no reason why I wouldn't be short in this position now again. So that's what I mean when I say sell on weakness. You don't need to look at any news, any analysis, apply any technical analysis charts or blah, 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 all of that stuff, right? It's just noise. It's all noise. Follow what you can see. Trade what you can see, not what you can think, is a great excerpt from one of the trading books that I will drop a link to below this video, or you can find in the resources tab of my website. So there's I've got a couple of websites. That's my website, pitvillagetrader.co.uk. On the top there's a resources tab where I've got all of the books and educational tools and anything really that I've used to help me get to where I am. So if you go to that tab, click on resources and then click on the books section, you can see a long list of trading books, and that quote comes from one of those books. You know, trade what you see, not what you think, because what you can see, it's happening. What you think might or might not happen. And that's an example of buying on strength and selling on weakness. And the final part of all of this, which I'm going to go to in step 3 following this video, which will be the next one on the slide sheet or the next one in the playlist, is how long and how do you run those winners? You know, how do you ride your winners hard? All right, that's all for now, guys. I'll speak to you next time. Cheers. Bye.